So, hi, I'm here today with co-founder, CEO of Bitwise Investments, Hunter Horsley. Hunter, thank you very much for participating in the Artisan podcast.
It's a total pleasure, Arthur. As I've said to you before, I think you're one of the most brilliant thinkers over the years on Bitcoin. So it's fun to get a chance to talk to you about it.
Well, thank you. But we're not going to be chatting about me today. We're actually going to be talking about you. And we were fortunate to meet a few years ago in San Francisco. But I mean, did you grow up in San Francisco, or did you come from somewhere else in the U.S.? And maybe how you ended up being CEO of Bitwise.
Sure. Yeah, I'm from the Bay Area. Was raised in the Bay Area in Menlo Park, California. Went off to the East Coast to the Wharton School for college.
And Wharton's in Chicago, right? For Canadians.
Sorry, yeah, apologize. Wharton is actually in Philadelphia.
Philly. Oh, pardon me.
It's
Yes.
it's the business school of the University of Pennsylvania. So was out in Philly, and ultimately came back to the Bay Area to take a job at Instagram and Facebook, which sort of brought me back.
That's pretty cool. So, obviously you're in one of the key places, but going back to maybe probably pre-university, how old were you when you discovered the internet, or maybe you had your first PC? I mean, I'd love to know where it begins.
I loved computers.
Was it a video games? Was it video games, or was it like an AT clone that you were playing with and building?
I love video games. I was the type of unpopular, had that sort of unpopular energy in middle school and high school, where I would sort of be browsing the prices at which you could get, RAM with 3000 megahertz speed. And at the time, I mean, my first computer was a Compaq that I think had, maybe like 2 megabytes of hard drive on a spinning disk. At the time, they were spinning at like 200 RPMs or something. And there were still floppy disks, CD-ROM optical drives. And then it was just fascinating. I mean, to witness the power of technology. I mean, things that went from being thousands of dollars became hundreds of dollars. I mean, today we all have solid state.
Did you have dial-up when you first went on the internet?
First had dial-up, which is painful. But yeah, I mean, there's technology just is such a tailwind. And hard drives went from megabytes to gigabytes. I went from spinning disks at 2000 RPMs to 4800 to 5400 to 7200 to 10,000. They were called Raptors at 10,000 RPMs, and then we hopped over to solid state. And everyone has solid state today. It's like alien technology. I think people who buy a MacBook today, probably just think of it as in terms of gigabytes and don't even think about the speed of the hard drive. But it's a fascinating journey. And for a long time, I was a Lenovo user. I was a diehard PC person, and a former boss sort of demanded that I hop over to Apple products, which is where I am today. But always loved computers. I would take.
Was that at Facebook apart, where you got pushed to go to Apple, or?
I actually had in college. I had a job at an ed tech company, and the founder was obsessed with Apple products, and he actually took me out one day and he said, "You're the only person in the company who uses a PC, and I feel like you just don't get it. So it may not make sense for you to work here." Yeah. And I said, "All right, I'll get an effing Mac." And so that was when I made the change in maybe it was 2011 or something like that.
Yeah, I got into arguments all the time about that with my dad. My first computer was 1986. It was an IBM clone with 256K memory, and
Yeah.
and I'm showing him how I'm programming in Basic,
Mm-hmm.
and he says like, "What's that?" And I said, "Wow, this is how you talk to a computer and get it to do things." He goes, "Oh, it's all wrong.
Mm-hmm.
It's all wrong. It should be pictures." He goes, "Everything
Oh
should be
man.
done with pictures, and the software should drive the entire computer. It should have nothing to do with hardware." And
Wow.
he was 15 years early, really.
Yeah.
But the way that Apple went was the way that my dad said made sense. He just thought the other ways wasn't very productive for non literate computer programmers. So
Mm-hmm.
I think he would have been in your boss's camp on that one.
Yeah, yeah, he had a good intuition there. With tech, it's often so much about timing, but that ended up being the right call.
So you ended up at Facebook. I mean, it goes by a different name now, but Meta. But like Facebook, I mean, movies have been made about this company. You must have you know um, learned so much, and it would be like sort of diving into the deep end without being able to swim for some people.
Mm-hmm.
What was that like?
Yeah, it was extraordinary. I joined as a product manager, so working with software engineers and designers and business partners. And I joined Instagram maybe 100 or 150 employees. It had been bought by Facebook, and I think the user base was a few hundred million. And I got kind of lucky with the timing. Zuck had basically said, "Okay, Instagram, it's time for you to contribute some revenue." So when I joined, it was at about 70 million of revenue run rate, and I was there through a billion of run rate. I think today it's doing north of 10, but got to see that platform get monetized, which was it was fascinating. There were a bunch of lessons in there, and then after that, I moved over to Facebook, and worked on a few things there. Was in charge of there's a component of how digital content creators monetize. Sometimes it's through ad rev share. There's another component which is called branded content. People call it sponsored content, but where a brand will pay them directly to create a piece of content. So I was in charge of that for a period of time.
So let me get this straight, just to put it into layman's terms. So uh, you're the rascal that somehow got sponsored ads, video ads, brought into my Facebook feed. Am I getting that sort of close to right?
You're decently close to right on that. Yeah, I actually literally worked on the Facebook side on how we would monetize video. So Facebook has lived many lives. Facebook was born in 2004. It was just profiles, for college students where they could upload photos.
But we all know where it came from, right? It was Family Ties, right? The episode where Michael P. Keaton finds his girlfriend or potential girlfriends using the Facebook at school, right?
That's the origin, was browsing people's profiles, and then they created the news feed where you could see updates and posts from people, and it was mostly text. Became more and more images. Then mobile happened. iPhone was 2007. Mobile was really taking off around 2010. People vividly remember that era, but at that time, people weren't sure if mobile was going to be a sideshow or if mobile was an important new computing platform. Facebook, before its IPO, had 85% of its revenue on desktop. They then had to transition to mobile. And then the way this relates to video is that over the ensuing years, video, broadband internet connection was increasing. And the iPhone itself had great video capture, integrated obviously with the ability to upload to the internet and to apps. So more and more video was getting posted. The core Facebook business model was, at least at the time I was there, I think the average user had something like 20 sessions a day. They'd open the app 20 times, and the average session length was like 83 seconds. And so the business model was they open it, they start scrolling through the feed, they read some text, they look at some photos, and then every sixth post, it's called the ad load. The ad load was about 16%. You'd show them an ad, and they keep scrolling. But the problem arose that they would scroll, they would see a video, they'd click and start watching, no more scrolling, no more ads, monetization breaks. So I was fortunate to get to work with an executive there named Fiji Simo, who's now the CEO of Instacart. And and a Bitwise shareholder actually, and present to Zuck and Cheryl on how we would monetize videos. And I indeed did pitch putting commercial breaks into videos and a few other things. So I had some role in that.
So you obviously understand the growth of networks, so you've seen it, you've experienced it. Uh, I don't know if your time was running out at Facebook, or, you discovered, Bitcoin while you were there, but it'd be great to hear how you first fell into Bitcoin, and then, the creation of Bitwise.
Yeah. So it's actually a little convoluted. One of my best friends was a brilliant engineer at Penn, named Hong Kim, and I was at Facebook as a product manager. Really, honestly, felt grateful to be there. Loved the work. And I would say also this is all before Facebook became sort of the world's most wanted tech company. Like it wasn't a deplorable at the time. It wasn't held in that regard. So it was this extraordinary technology story of a technology platform that was deployed to billions of people around the world, and became one of the biggest media platforms and one of the biggest advertising businesses. And to get to work on that intersection was, I just thought it was a really special opportunity. And I had some great bosses there that I was really grateful for as well. But Hong pinged me and said, "Hey, why don't you quit your job and we can start a company together?" And I said, get out of here. I couldn't be less interested. Why don't you try me again in 2 or 3 years? But I always had the aspiration to try to build a business from scratch. And so he and I talked about it, and to move through this story at a little bit of an accelerated speed. I opened up to one of my former bosses there. He had been at Google. He sold a company to Facebook, inside of the Facebook product management organization, which is maybe 50 or 100 PMs. He was sort of known. He was the executive that was known to be pretty engaged with the startup community. So I said to him, "Hey, am I crazy? Should I, Hong and I were working on things after hours. Should I be pursuing this? Is this a bad idea?" And we started getting feedback from him on things. And at one point, he and another investor said, "You know what? If you just quit your job and focus on this full time, we'll fund you doing that." So
Beautiful.
At that point, I felt like, even though I loved my job, I would regret not taking that opportunity. The two investors, again, one of them, his name is Avichal Garg, just an amazing investor. He was a part-time partner at Y Combinator. He now runs a very prominent venture fund called Electric Capital. And the other was a guy named Elad Gil, who in Silicon Valley, he's backed 40 unicorns at seed or Series A stage.
Wow.
So,
Wow.
and he started one himself. So I thought, if these two believe in this and are willing to be part of it, and Hong is a brilliant partner, I have to do it. So I left, and then we got lucky in that late 2016. If you were two technology people in San Francisco, there was a lot of discussion of Bitcoin and public blockchains. So we had those discussions. I had bought Bitcoin in 2014 or something, but couldn't remember where, and had to take it very seriously.
So you knew you needed a product to keep the keys safe.
Right. Yes. Yeah. So we started having a lot of conversations about it. And, what I would say is that at Facebook, you get to sort of witness a few things firsthand that I think everyone is intellectually familiar with, but to witness them firsthand really, makes an impression. Facebook just shows you the incredible scale of the internet. Over 3 billion users. I was on Safari last summer in Tanzania, drove through a rural roadside town, maybe 70 people, concrete block buildings, water from a well, but they have Coca-Cola, they have Vodafone, and they have Facebook. The reach of the internet that Facebook demonstrated is extraordinary. So you get that impression, number one. Number two, Facebook really forces you to realize that while the internet has caused the world to become able to communicate with each other, it is a very fragmented thing. You have 170 different rules of law, 170 different currencies, 170 different languages. You have 170 different financial systems and technology, internet infrastructure. There are a ton of versions of Android. So you have sort of the internet has connected people, but underneath that, the standards are just totally fragmented and systems. And then the third thing that you know I think can really appreciate it at Facebook is, and I think in many ways as the result of Facebook, much of the world has been on a one-way journey of losing trust in leaders. It could be political leaders, it could be social leaders, could be business leaders. But Facebook in 2004 basically gave everyone a blog that 500 to 1,000 friends would read. And of course, WhatsApp and WeChat have added to this dynamic, and Twitter. But in the environment where suddenly everyone could tell their story and share their views instead of just getting it from the nightly news, I think a lot of people started to realize that there were a whole host of experiences going on that they were unaware of, and that caused them to slowly erode some of their trust in what they thought they knew and what they were hearing from leaders. And so anyways, you see those three things at Facebook: the scale of the internet, the fragmentation of the underlying systems and standards across the world, and sort of the slowly eroding trust in central leaders and authorities. And then you see Bitcoin. And we encountered Bitcoin and public blockchains in late 2016. And what is Bitcoin? It's something born out of the great financial crisis that leverages the scale of the internet, but puts one unified global standard into place and addresses the eroding trust of leaders by getting rid of the leader. There is no leader.
Did you ever use Napster, by the way?
Yeah, I have used
it. So one of your neighbors in the valley, was responsible for shutting them down, right? Because it was a centralized database.
Right. Yep. Exactly. And there you can see one of the challenges. That seeing having spent that time at Facebook and then seeing Bitcoin and public blockchains, I was predisposed to say, this is a profound proposition here. This new computing platform could really chip away at some of those problems and could really be a technology born out of the internet that helps the 21st century be different and better than the 20th. I will also just add that I was the teaching assistant for history of business at the Wharton School. I was very close with my grandmother, who was born in the 1920s, and in her lifetime, she saw the automobile become popular. She saw the advent of the commercial airplane. She saw the refrigerator be invented, the dishwasher. She saw the air conditioner, the radio, the television, not to mention the internet, the iPhone, and the Apple Watch. And so through that aperture, you can witness how much can happen in a lifetime. And so if you sit in 2024, I think it's right to expect that a lot can happen in a lifetime, and a lot can happen in this century. So what are the vectors of progress that you see developing that could be part of how the 21st century moves forward? I don't think that 2023 was sort of done and final in terms of human progress. And so again, I just had the mindset that the world is going to step forward and is going to wind up different than a decade or decades ago. And again, through that experience, I saw a public blockchain that gives you the scale of the internet with a global standard that allows the world to interoperate much more seamlessly, addresses the eroding trust that an executive leader will prioritize your interests over shareholder returns, and said that's profound, and it has a lot of risks and a lot of reasons why it might not work to its full potential, but it does have the potential to be profound, and not everything has the potential to be profound and really meaningful. So we wanted to contribute to it in some way, and and this is the longest
No,
answer
not at all.
in the
Not at all.
world,
This is
but
great.
we were speaking with a lot of people, executives at Facebook and Google. Hong had worked at Google, friends who worked at Blackstone and Goldman, and these people are incredibly financially savvy, incredibly tech savvy. And a common thing that we heard from them is that I'd like to invest in the space, but I don't have time to figure it all out and be constantly monitoring it. And at some point, we heard that exact thought enough times that we said, "Wow, if these people feel that way, then how are most busy people going to participate in this opportunity set?" Public blockchains, if Bitcoin becomes extremely widely adopted and popular, there's going to be this bearer instrument, this liquid asset. And how are people going to be able to be on the right side of that? And we realized at the time that most of the access that was being built for, to some extent, day traders, enthusiasts, and nobody was really building for the way that most people access different asset classes. I mean, the way that people access municipal bonds or emerging markets, they work with a financial advisor. They use an asset management product like an ETF or a mutual fund or a separate account. And no one was focused on building that building block. And we said if we could do that, it deserves a specialist, because the underlying asset class is software. It's not real estate. So it deserves people who understand software, and it would be it could be a really valuable thing to these people to be able to participate in the opportunity and to do so with peace of mind and have it fold into the rest of their lives, their trust and estate, their taxes, their conversation and objectives with their financial advisors. So that's what brought us to Bitwise, which got started in 2017.
So 2017, that the year of founding. I mean, were you? Did you want to bring an ETF to the market right away, or was that something a little later on in the business process?
We have always wanted to have a Bitcoin ETF. I think to many of us, I think you as well, Arthur. It's always just sort of been obvious that a Bitcoin ETF would be obviously so valuable and so useful to investors. But the challenge of operating in the space, we operate in the regulated part of the industry. We're based in the U.S. and it just hasn't been possible for a long time. So we've been working on it for maybe 6 years. We've filed many times. We've spent countless hours. We've done hundreds of pages of analysis for the SEC, and it's just taken time to get there. In the meantime, we've always tried to introduce whatever vehicle or instrument. If you can't do a Bitcoin ETF, what's the next best thing? And we've tried to do that. So we have other publicly traded funds. We have a private Bitcoin fund for accredited investors only. We have separate accounts.
Venture capital as well.
Yeah, we have a fund that holds Bitcoin miners and companies.
Investing in companies in the ecosystem.
We tried to expand access to the opportunity set, but it's taken a long time to get to a Bitcoin ETF, and I'm thrilled. I thought my tombstone was going to read, "It's a matter of when, not if," and I'm glad that we finally got there.
Yeah, and I'm going to have to tease you a little bit, just because Northland, we're here in Canada, but the Canadian marketplace was the first place that an ETF was created and traded, and it was almost 3 years after that one was approved in the United States by the SEC, and given that we had a free trading ETF in Canada for Bitcoin in 2020, again, it's just over 3 years now. To have it happen in the United States. So, things like ETFs, things like basketball, things like football, telephone, Canadians can do okay in. It's just,
you guys are pretty smart.
It's just the marketplace is so much larger in the US, right? That's the place to be in the end. And although we've had Bitcoin ETFs in Canada, there really hasn't been the large flows. We saw them the first few months into that space, and it's really been stagnant thereafter. And something that maybe you can enlighten everybody. but the numbers that have come in to the approved Bitcoin spot ETFs in the United States are staggering. I mean, that these are massive, massive numbers. Can you go into that maybe a bit?
Yeah, absolutely. And credit where credit is due. You know, I think you were sharing with me before that fact about the first ETF ever, just of any kind, being launched in, I think you said 1990, and it wasn't until 1993 that SPY happened in the US. So it's funny that legacy has continued 30 years later. You got to Bitcoin well before the US, and I also have to say, you know, being a US based company, I was dying. I was like, they got it done in Canada. Why in the world must it be so painful here in the US? So was jealous that you guys were able to sort of make the progress, and the US got around to it, which means that they came to the same conclusion and just took longer. So I think.
But I'm happy it got done. And how are the flows so far? Like they're large, right?
Oh my gosh, staggering. So our Bitcoin ETF, the Bitwise Bitcoin ETF, is the 22nd or 21st fastest ETF to a billion in the history of ETFs. There are over 10, maybe 20,000 ETFs, 30 years of history. It has been an extraordinary launch. The new ETFs have gathered almost $10 billion, I want to say, in about a month here, which is unprecedented, and an extraordinary indication of indeed how useful this vehicle, which provides a lot of protections and helps Bitcoin fit into the rest of people's financial portfolios, how powerful that is. We do a survey. We've done a survey every year for the last 6 years of, you know, we serve a lot of wealth management firms, family offices, institutional investors. We've done a survey of financial advisors for the last several years. We put out our most recent one in the beginning of January, and 98% said that they were waiting for a Bitcoin ETF. Or excuse me, 88% said they were waiting for a Bitcoin ETF to be able to participate in the space. So, you know, I think that is an example. It's not the only important data point, but an example of how transformative getting access to a Bitcoin ETF is for the capital markets here.
Now you've done a lot of work at Bitwise on portfolio creation and how the addition of Bitcoin to a financial portfolio can help. I was looking at it today, and it's just some great work that advisors can use. Is it only for advisors, or is that type of information more broadly available?
We can share it. Advisors that are partners of ours can share it with their clients. They have the ability to do that if they like. There are a lot of institutional investors. We wrote the CFA's guide to Bitcoin, blockchain, and cryptocurrencies a few years ago. So there's a lot of institutional investors, market participants, and again, advisors can share it with their clients if they like. And we have a number of things. We have that white paper on Bitcoin in a traditional portfolio that does some of the analysis on. I think a lot of people are surprised with Bitcoin. So I think many people, when they first see Bitcoin, they say this thing is volatile, and volatility is scary and bad. But there's a big caveat, which is when you're constructing a portfolio, if the correlation is low to other things, then the volatility can be extremely helpful. And so in the case of Bitcoin, the correlation is 0.1 to the S&P 500, maybe 0.15 to the Qs to the NASDAQ, maybe 4 basis points to the AG, the Bloomberg Aggregate Bond Index. It's very low to gold. And what that means is if you have a portfolio and stocks are down, bonds are up a little bit, Bitcoin is likely to be doing something different. It might be up, it might be flat. And the net of that is that when you view it in isolation, day to day, you say it's volatile. But when you view just the overall portfolio, it actually reduces the overall volatility of the portfolio, reduces the risk that the portfolio has. And so, some of that is not always intuitive to people. So we try to put that in some of our white papers to help people think that through. But I think it's a reason that a lot of investment professionals come to the view that this is very, very constructive, even setting aside that you have a chance here to own a piece of one of the profound platforms of the 21st century, and there's a great return opportunity. Even if you just look at it from sort of a simple modern portfolio theory or diversification perspective, there's a really strong case for its role in a portfolio. Here in the U.S., we had the meltdown of a number of regional banks in March of last year: First Republic, Silicon Valley Bank, Signature Bank, and there were one or two others. And so there was a lot of concern as rates had come up drastically in the U.S. that the balance sheet of banks had become very weak or even insolvent. Then you saw a run on the banks, and in that moment, Bitcoin was actually up. And it's an example of so the financial sector of your equities portfolio was down as concern was going up. So risk appetite was coming down, but meanwhile Bitcoin was up. And so in the overall view,
because there's no counterparty risk to Bitcoin, right? It's one of the only assets that don't have that.
Yeah. It's an essential element of Bitcoin. Yeah, right. Yeah, totally. So I think we have a lot of research pieces. We have a Bitcoin library of about 22 pages that addresses things like what are Bitcoin mining, is Bitcoin bad for the environment, how to size Bitcoin in a portfolio, things that I think people have thought about. Sometimes people have researched, but they've never really found a resource that is straightforward and can be understood. They've read a lot of confusing things online. So we try to put that together. Our CIO writes weekly commentary on what's going on in markets, actually has a very interesting piece coming out next week.
And Matt Hoogan, I mean, like I've met Matt a few times, and he's the chief investment officer of Bitwise. He was formerly at Inside ETFs, right? So he was constantly, he was one of the experts in the space in the ETF markets. So to have, Matt Hoogan, CFA charter holder, I believe as well, just great wealth of knowledge, and a lot of the work that Bitwise did, played a key role in the due diligence of our firm. So, thank you guys for all that leading work.
Oh, thank you. And I would also say, I know you don't want me to talk about you, but we now have over 3,000 RIAs, family offices, wealth teams, institutional investors who use a Bitwise product. And so we have a pretty good survey of how different investment professionals and wealth management firms and family offices have over time explored and gone on a journey with Bitcoin. And I think that you've had the clearest thinking a lot faster than most people. And it's a real benefit to your clients, because it's kind of like we talked about with Canada getting to a Bitcoin ETF before the US did. What we're seeing now is a lot of wealth management firms and family offices are coming to the same conclusion that you did. They just took longer. And as a byproduct, they're going to buy their first Bitcoin at $50,000 or $60,000. They didn't end up disagreeing.
10 times the price we bought it at for our clients.
Yeah. Exactly. They didn't end up disagreeing. They came to the same conclusion. They just took longer. And so clients won't have benefited as much. I think that there's a ton of room to go in Bitcoin's journey. So I'm not worried for our clients. I think it's still a great point to come in. But I think there's a real credit to you that you had sort of the intellectual open-mindedness to encounter something that was, I think not well known, very confusing space, and see the merits that took a lot of people many more years to come to. So Matt does a great job of putting together, I think a challenge that people often feel with this space is it's just a mess. Like, you hear one thing from your nephew at Thanksgiving, you read something in Bloomberg, you hear a different thing from some investment professional, and it's just all very confusing. And our role as one of the premier specialists is to try to, we spend our days in the rainforest, so to speak. And it's our job to wade through the dangers and the beautiful things that live in the rainforest, and to come out and say, here's the story, here's what's in there, and here's the part that we think has merits, and to present that simply because our clients are busy people, in some cases extraordinary people. It's not a lack of intelligence. It's they're busy, and when people around them say a bunch of confusing and contradicting things, they say, you know what, I've got other great things going on in my life. This is just too complicated. So we try to help simplify it.
Yeah, I mean, I know some of the family offices and foundations you've educated and advised, and their household names globally. These are some of the most sophisticated investors with some of the best track records in the world, and the fact that they came to yourself and Bitwise to get insight on the sector, I really think that is a strong vote of confidence.
I appreciate that. Yeah, I think that some people are attracted. There these days a lot of options for the space. There's some household names, but I think that some people have an intuition that rather than investing through something that's convenient, they want the best. Maybe they want to invest through the best real estate manager, or they want the best venture capital manager, and they look at this space and they say, wait a minute, we want the best specialist on Bitcoin and digital assets. It's this whole different thing. If you are investing in a real estate manager, you hope that they understand permitting and architecture and general contractors. And if you're investing in Bitcoin and digital assets, you hope that they understand open source software and the difference between Rust and OCaml and APIs and the importance of interoperability between programs. And that's just a different expertise. And we've tried to build a firm that brings together the technology background. And to be very clear, Bitwise is now full of ex-BlackRock, our risk managers from Millennium. Our general counsel is from the Department of Justice in the US. So it's not just a bunch of tech people running around, but it is the combination of those two disciplines. And I think that has resonated with a lot of sophisticated investors as the right partner for this area, which is quite different from other traditional asset classes.
Yeah, and without dropping names, I mean, you're quite right about picking the best managers to invest with for a sector. And one of the firms that we have a lot of capital with and a good track record with, the founder of that firm was sending emails to you last week, saying, is this the right time? So it is a small world. There are specialists, and you want to go to them. Now, one of the things that Bitwise did differently, I think, than a lot of other firms is you actually look at the Bitcoin ecosystem. And from what I've read, you are giving back 10% of the profits of Bitwise on this ETF, I presume, back to Bitcoin open source development. Can you speak to that maybe a little bit and why you did it?
Yeah. So with this Bitcoin ETF, we wanted to construct the highest quality product. We have the lowest fee of any of the large Bitcoin ETFs. So it's, I think, a great value to investors. And we're happy to do that because, the reason that we do this, the reason I'm not working somewhere else is because we love getting to have a partnership with, many of the most important and thoughtful people in the world. And we love the opportunity to. So we have the lowest price of the large ETFs. It's an incredibly efficient product. But we've also, because we're a specialist, done some things that are specific to the nature of the asset class. So two things. One is that we give investors the ability to confirm on the Bitcoin blockchain for themselves that the Bitcoin is there. And if you think back to the financial crisis and AIG and Lehman, all trying to figure out what they owned and what they had exposure to, one of the promises of Bitcoin is that through a transparent public blockchain, you can build trust, not because some leader or authority says so, but because you can verify it yourself. So the Bitwise Bitcoin ETF is the only Bitcoin ETF that allows investors to verify directly on the Bitcoin blockchain that the Bitcoin holdings that we say are there are there. Now, of course,
and you publicly show your key. I mean, I see that all the time on social media, right?
Yeah, we show the public address. For people who are less familiar with the space, the public address has no bearing on security. Public addresses are public. The private key, we of course do not expose, and the private key is what allows the movement of the assets. But public addresses are, by their name, they're public, and people can know each other's public addresses. We choose to make that convenient for investors because that is a unique capability of the Bitcoin blockchain. So we're excited to pioneer that. That's the first time it's been possible in an ETF, and it's the Bitcoin ETF that only Bitcoin ETF that does that today. And I think that's resonated with a lot of investors. The other thing we do, which you mentioned, is we committed to donating 10% of the gross profits from this fund to the open source development community. Bitcoin is an open source software project. Open source software projects, Linus Torvalds, the inventor and maintainer of Linux, which has been fundamental to the internet, to software, for a very long time, maintained that open source project. Similarly, Bitcoin has maintainers, open source developers who help keep it updated, make changes that are merited through a very robust consensus process. But there's no corporation. They don't get paid by Google. They don't get paid by Bitcoin Inc. They do it out of their desire to see this thing succeed, and they have to get paid through grants ultimately. There are about 5 organizations that provide grants, and our view was if an investor is entrusting us to get exposure to Bitcoin, then it's a good thing for that investor if the developer ecosystem continues to be healthy and keep the Bitcoin blockchain in good hygiene from a development perspective. So we will cut into, we're already offering the lowest fee. So we're not taking that from investors. We'll take it out of our own pocket and take 10% of the gross profits and use that to fund Bitcoin developers, which again, I think is very consistent with what's in the best interest of our clients, who are ultimately owners of Bitcoin and want Bitcoin to be taken care of. But because there's no corporation, these open source developers do need resources, and we wanted to contribute to that. So we were excited to announce that. And I'll tell you, we know many of the key Bitcoin core developers. There are 5 really important ones, and I was just with 2 of them last week. I mean, they really appreciate it. And by virtue of that, they really appreciate you, Arthur, and your clients. They understand that somebody who chooses the Bitwise Bitcoin ETF is recognizing their contributions, and it directly impacts them. So we were excited, again, as a specialist who understands the nuances of this space, to make that a feature of the product.
So lastly, the big question, price predictions. I know we said we're not going to bring this up, but is it probably safe to say that in the short term, the number will probably be, could be lower than what people think, but in the long term, it might be, the market cap might be higher?
It's hard to know what people think. I was just with a group of 25 pretty, influential Bitcoin people last week. Some of the core developers, some institutional investors, some very wealthy individuals who own, $1 billion plus of Bitcoin. And the host surveyed the group on what their price predictions were for next year, and it ranged from I want to say 60,000 to 450,000. So it's always hard to know what people are thinking. What I would say is that I think that the most important thing to consider around the price of Bitcoin is that the launch of the Bitcoin ETFs, everything has changed. The Bitcoin ETF was like the IPO. Bitcoin has been valued by a very constrained part of the capital market. Most of capital markets have not been able to access Bitcoin. I know that sounds ridiculous to people who have access to it, but it's just a matter of fact that most of the mutual funds, most of the pensions, endowments, and foundations have not felt comfortable doing it in the formats that's been possible. Most wealth managers in the US have not had access. And so the majority of capital markets have not been able to access Bitcoin. And that means that we have not had efficient price discovery. So I think that with the IPO, now, just like any other IPO, you find out what the public markets think your asset is worth. And I think with the launch of Bitcoin ETFs, we are about to discover in 2024 what the much broader public markets think Bitcoin is worth. And I think that is going to surprise people, because I think a lot of people who've been focused on Bitcoin, they've seen how its price has moved. They're familiar with, the all-time high was 68, 69,000. and they interpret things through that lens. But I think that the public market that now has access doesn't care about that. And I would be unsurprised if it was a $100,000 asset by the end of this year. I'm not promising that. I'm not guaranteeing it. But I just think that
No, but and then how long does it stay there? And that's what I always tell clients and other investors is if you don't like the price of Bitcoin today, you might like it tomorrow. And similarly, if you like it today, you may not like it tomorrow.
Yeah. I mean, the nature of this space is that most people lose money by trying to be clever and predict the week-to-week prices. I think ultimately you have to take a sort of a step back and say, do I believe in the long-term potential of this platform? Do I think it could be the analogy that resonates with me? I of course come from the technology perspective, Arthur, but I always wind up thinking about the journey of Uber. I don't know how closely you watch that, but when Uber got started, it was sort of an app you can order a black car with, and people said, "Oh, that's only for weirdos and rich people who like black cars. That's not a mainstream thing." And then they rolled out Uber X, which directly took on taxis, and then people said, "Oh, well, the taxis are never going to allow this to happen. They have a monopoly. It's a cabal. They're going to defend their castle with their lives." And by the way, even if you take the castle in the US, taxis do $400 million of revenue a year. That's not even that giant of a business. And then as Uber ate into that market, people said, well, okay, but it's only going to be a certain size. And then Uber leapt over the market and was doing even more revenue than taxis had ever done, because of course Uber is much more useful than a taxi. You can get it anywhere.
Oh, I had taxis in Central Park, and they're like, "Well, where are you going to?" And then I gave them the wrong answer, and they said, "Oh, I'm on break now." And I start taking pictures of their license plate. I said, "I'm sending this in," and they got defensive, and I said, "I'm never going to use a taxi again in New York, never." And I only use Uber.
Same program. So I think one of the mistakes that some investors made. There were private market investors at every round of Uber. Is they said, "Oh, this is just going to compete with taxis," but in reality, it's much better than a taxi. Digital payment, order it from anywhere, coverage anywhere. You know exactly how long the wait's going to be. You can make reviews. So you're much more likely to trust the driver. And so it actually ended up expanding and leaping the size of the legacy market. And then, of course, along Uber's journey, people had other things. They said, it's a poorly run company. Well, then they put in new management. Then it went public, and they said it's not profitable. But then they became profitable. And so, but the reason I bring that up is, I think that Bitcoin is sort of on a similar journey, which is it's emergent in nature, and maybe its future is to take 50% market share from gold, or maybe it's so much more useful than gold that it's going to be multiples of a bigger asset than gold, because gold, of course, has merits, but it also has constraints. Bitcoin is completely digital. Bitcoin can be held in very small amounts. Bitcoin can be used for payments. I'm not saying that it will be used always for payments.
Yeah, but there's secondary layers that are being developed now that do work.
Exactly.
For instance, in Costa Rica, there's an app called the Bitcoin Jungle wallet, and it allows you to use the Lightning Network to make micropayments. And there's communities that basically every vendor uses it in a town. But in addition, it integrates with the e-transfer service called SimPay. So you can spend in Bitcoin, and the receiver can be paid in colones or US dollars in their bank account. So it's fully integrated into the banking system in Costa Rica.
Wow.
And it's really just beginning. So, and then you've got things like Strike with Jack Mallers, using it, the network without actually the user seeing that they're using the Bitcoin network, right? So there's, if I was a money transfer bank, if I was, I'm trying to think of the companies that
Western Union, that type of
thing. That Warren owns, but yeah, I wouldn't want to own Western Union. Like its days are numbered. Yeah, it's going to disappear, right? So
as it relates to price, that doesn't mean, I don't know where it'll be at the end of this year. I think our CIO's prediction was $80,000. Again, that's not a promise, and Bitcoin does all sorts of things. But I think the point that I just have in mind there is there are profound possibilities with this asset. I think that many people think of the total addressable market as gold, which would put it at, if it replaced gold or replaced half of gold's demand, it would be a multi-$100,000 asset. But I think it actually
And
has
then
much
it'll
more
start
interesting
replacing.
huh?
Yeah, then it's going to start replacing real estate.
Yeah, I think it just has much more interesting optionality, and so I think
Yeah.
that as investors, we almost have to have the sort of intellectual humility or modesty to say we don't know exactly how it's going to play out. We know that the potential is large, and the traction it's had thus far is enough for us to believe that there's substance here. And Arthur Bitwise can keep us posted on the progress, and we can decide if we're going to change our minds in the future. But nobody knows for sure. And I will just also add that when the first PCs were being developed, and there's an interview with, I can't remember if it was Bill Gates or Steve Jobs, and they said, why does everyone need a mainframe in their home? They said, there's going to be a PC in every home in America, and they said, why? And they said, well, they're gonna keep their recipes on it, and they're gonna put the Rolodex on the computer, and maybe they'll balance their checkbook, and that was all they could imagine. So it's just hard. I think it's often hard in technology, and definitely with profound new computing platforms, for people to really, the PC, the internet, cloud, mobile, to really fully imagine what's to come. When the iPhone came out, I don't think people imagined TikTok and Uber and Venmo and Apple Pay were sure things.
No.
And with
No.
Bitcoin, I think that doesn't mean that one has to be ridiculously optimistic and think it'll be a $100 trillion asset. There's certainly levels of optimism that are absurd, but I think that the exciting opportunity is to be sort of cautiously optimistic that there really is a lot of potential and progress here. And again, the public market, just basically had the door open to access for the first time, and we're going to see in 2024 how the broad capital markets price all of that. And I suspect that they will price in that progress and that potential at a higher level than the much smaller market that previously had access to Bitcoin.
And we're not even getting into global macroeconomics, right? About how much debt's outstanding, what the interest payments are, will interest rates go down? None of that. I mean, we're just looking strictly at supply and demand right now. So, yeah, very, very bright future. It'll always be volatile in price, at least probably for the next better part of a decade, I think. Mm-hmm. But it's the most interesting asset I've ever researched in my 30-year career.
Wow.
The asymmetric return profile. I have a difficult time now looking at private equity, looking at real estate, looking at hedge funds, looking at equities when that's become the benchmark.
Right.
So it is a really interesting asset class.
It's fascinating.
So I just wanted to thank you today for all the time and the wisdom you've shared. I know our clients will greatly enjoy it, and look forward to speaking with you again soon, Hunter.
Oh, it was a total pleasure as always, and thanks for the conversation.
Fantastic.